For more details on the Fed's decision to raise that interest rate, we bring in financial advisor Patrick Strubbe. He is the founder of Preservation Specialists. Thanks so much for joining us.
Absolutely.
Thank you so much, Patrick, for being here with us today. So for people who may be watching and are so confused about, first, who is the Fed? Right. What are interest rates? Break it down for us about what it is and why it is important for us to care about it.
Yeah, so the Fed has been chosen essentially to decide what interest rates are in our country, and that affects just about all of us, whether we're borrowing money for a mortgage for a house, borrowing money for a loan for a car, have money on credit cards, credit card balances, so we're paying interest there. And then we work with a lot of retirees, so maybe they've saved money and they've got money in the bank, so they want to earn money, so then the interest rate affects them too. So what the Fed does affects all of us. That's why it's important. And they decided to raise rates by 1%. And we thought that was kind of the middle of the road. We've had some scariness with the banks failing, a couple of banks failing lately on the one hand, but on the other hand, the Fed, they've said their number one job is they gotta stop inflation, and we all feel inflation every day, obviously. So by continuing to raise rates a little bit, they're continuing to try and help us in that regard.
Yeah, inflation has eased down. It was at 9% at one point. Now it's down to 6%. You heard Jerome Powell say he wants to get it down to 2%. Can we expect more rate hikes in the future? I mean, are rates going to go even higher from here?
Yeah, I think a lot of us thought that follow this really closely. We thought, we were probably going to see a couple more hikes. But then what happens is when there start to be stresses in the economy, they don't want to go any higher. And of course, a large bank failing, that's a stress in the economy. So we've just seen that in the last week or two. So everyone was really on pins and needles to see what they would do. I think right now we're going to wonder if maybe this is the highest the rates will get. So that's going to be an interesting thing to see. And you're exactly right. They want inflation at 2%. He said today they think by the end of the year it'll be about 3.5. So that's still a little higher than they want it, but it's a lot better than it's been over the last year.
Patrick, any ways to protect our money from these interest rates?
Yeah, so I think it really depends on who you are and how you're using your money right now. If you have a variable rate loan of any kind on a car, on your home, this is something we really want to be watching. If you have credit card debt, that credit card company is probably putting your rate up as we speak right now. They're typing it in the computer. So we want to be aware of that and try and pay that down. If you're a saver, if you're a retiree or someone who's accumulated some money, now's a great time to be looking at safe things like CDs at the bank or annuities with fixed rates. We may be at a time where it's a great time to lock in interest rates right now.
Yeah, especially when you talk about making a long-term purchase. Mortgage rates, much higher than they've been in the past. Maybe financing a car, it's just going to be more expensive to do that, at least for now.
It is, and I think that's where you really want to have an experienced person that's helping you with your loan. Because that's not our expertise, that we don't do that every day, but you really, maybe now's not the time to lock in a 30-year mortgage. Maybe you want to look at something different, because most experts think these are a little unusually high rates. I mean, we had over a decade where rates were almost close to zero.
Yeah.
And no one knows the future, but we think maybe rates will start to go back that way at some point. So yeah, you're absolutely right. If you're buying a house right now, it's going to be really tough on that rate, but maybe be thoughtful and work with your lender on looking at different ideas.
All good details there, Patrick. Any other tips or suggestions for our viewers?
I don't think so. I think just continue to be aware and watch out and keep informed, because if there's more bank stress or major changes with interest rates, you need to know what's going on.
Yeah, absolutely. Something we're going to keep an eye on. Also want to make a clarification when it comes to the Dow. The Dow was down 530 points today. As a result of those interest rate hikes. So, investors right now a little bit skittish as they see those interest rates go up in the effort to curb inflation. Patrick, thank you so much for joining us. We certainly appreciated all that advice, very helpful.
Absolutely. And then you have a radio show as well where you take deep dives into these types of topics. Can you tell our viewers where they can listen to you?
Yeah, absolutely. So we're on WVOC and Saturdays at noon, and replays again Sunday morning. And it's all about everything finance. So it could be about interest rates, it could be about the stock market, how to retire successfully, and so we love to share that information with everyone.
Yeah, I guess one more thing maybe just to add, Patrick, in terms of advice when it comes to anybody who's investing right now, people who have 401ks, You know, is the advice kind of to stay the course and kind of let these things play out, especially if you're a long-term investor, you know, somebody who's not going to be taking out your 401k for a couple of years?
You said it so well. It depends on where you're at in life. If you've got 10 plus years, we always say put the blinders on like a racehorse, and just it's going to be fine eventually, right? You don't have to worry about it right now. But if you are within, say, 5 years of retirement, it's probably a really good idea to be taking a look at that and maybe talking to someone like our firm or another financial planning firm to see if you're actually set up properly for, you know, how close to that stage that you are.
All right.